You are listening to Mining Stock Education.
So, Brian, I came up with 3 different categories of what I'll term junior mining ghosts. And this is subject to change, even as I come up with my own paradigms and understandings.
The double ghosts are very hard. And that individual is particularly good at leaving no trace behind.
Thanks for tuning in to Mining Stock Education. And in today's show, you're going to hear from my friend Brian Leni and I, co-hosts of the show, regarding our thoughts on the last month of junior mining investing with a particular North American focus. We were just at PDAC in Toronto the past 2 days, and I had some international listeners come up to me and shake my hand, so we appreciate the listenership. And one of the questions, Brian, that I asked was, as someone across the ocean listening to the show, do you still find relevance in what we talk about with the North American focus? And the answer was yes, because we deal a lot with process, not just specific names. You were at Metals Investor Forum 2 days before PDAC. And what was your vibe and thoughts in reflecting upon the sentiment at MIF, or Metals Investor Forum?
It was great. It was a lot along the lines of January, I would say. I think the venue in particular is a little bit smaller than the pack room. And so it invariably feels a little bit different.
Which is where the Vancouver MIF is held, just for those that don't know.
Sorry, that's right. And so I would just say it feels a little bit different, but the vibe, especially on the Saturday, the day before PDAC started, you could see that there was definitely an uptick in the people that were coming through. And there was a lot of the biggest takeaway for me was the amount of deal talking from the corporates or the company side of things. There was a lot of companies there that I recognize that are sort of in my network that were there to talk about project generation, to talk about new things that were going on with the companies. And you do not see that very often. And I think, given where we are in the market, given the proximity to PDAC, where PDAC, I would say, would be arguably the biggest venue or time of the year for deals to be done right before that drill season or just, geological mapping season, however you want to look at it, would be the biggest event. And these guys were in full force at Metals Investors Forum. And really, so Metals Investors Forum is held at the Delta, which is right beside the convention center. And so whether it was on the third floor where the conference was, or the mezzanine below, or really in the lobby, I was going up and down having my own meetings. You saw a lot of chatter and a lot of people that you don't normally see at those kinds of events. And they're obviously, and I talked to a few of them, they're obviously talking about, new deals and trying to make new deals. And so that's a really good sign for the sector and where we're going. And sort of regardless of what it may or may not mean of where we are in the cycle, new deals and a steady stream of cash into the sector is a really good thing, especially on the exploration front. That's really what's been missing probably over the last decade is a strong push on the exploration front. And if you look at the way this world is setting up, both in the precious metal side of things, and probably even more importantly, given what's going on in the world right now, the critical minerals or critical metals, rare earths, however you want to sort of frame that, more focus, more emphasis on the importance of mining, and probably on the secondary refinement are really good things. And that seems to be all in full force.
So I attended a panel in a session about the resurgence of not only Canadian mining, but Canadian processing. And one of the things that were discussed on the panel was, particularly between Ottawa and northern Quebec, having kind of like a hub of processing. 20,000 tons per day was what was thrown out, to where different companies could actually use that, to where they would build out the infrastructure, a partnership between government and private entities. And with all of the deposits there, I believe you said there was like 15 to 20 different quality projects in that range that could be considered for use of this processing facility, versus just building their own processing facility at site. So, of course, this is just the ideas. It's politicians interviewing, in this panel, mining CEOs, and this is the idea stage. But I'll tell you, as an American listening too, I like to hear like the Canadian pride in the Canadian, let's pick ourselves up by the bootstraps. Let's make Canada number one in mining again. Will it come to pass? I don't know, but I then listened to the Mines and Energy Minister talk, and then he brought probably 15 companies up on stage and signed agreements with them and gave away grants to a bunch of different junior mining companies. So there seems to be some desire and initiative to really make a difference. We'll see what the follow through is like. You're a skeptical libertarian. So without bashing your politicians too much, do you have any response to what I'm sharing?
Well, I guess I like you're prefacing it for me. I view that with high skepticism, just given the history of not only Canadian politics, but politics in general across the world. I think that, it's it's supposed to sort of bring hope and intrigue to people viewing. And, that's exactly why they did it the way they did it. Now, that aside, we've dug ourselves in Canada, especially in a huge hole. We have a huge reliance on the States. And that relationship is as tenuous as it probably has ever been. So we really don't have a choice. And if you leave it up to the market, which is the proper thing to do, given where we're headed, given everything that's going on in the world, you probably don't have the timeline, because, the market's rightly going to decide, given with the laws, given the structure of a lot of the provincial stuff or trade within provinces, that, you probably want to stay away from Canada in a lot of ways. And so the government probably does have to step in, although I think it is not in the best interest of the people in general, because there's going to be a lot of waste. But at this point, there's really no other choice. So those sorts of things you're talking about are probably going to have to be done. And I'll fully believe it when I see it, when you start breaking the ground and actually building these things. In Quebec, being on St. Lawrence, being able to feed, whether it's the States or Europe, is really important. And that should be on the docket for someone to develop, given the need for stuff like lithium, for copper, I guess precious metals to a certain degree, but those critical minerals are really what we're all talking about. And so if it comes to fruition, it's a great thing. Although I am, of course, skeptical on their ability to execute, and more importantly, pick the right companies and projects to support.
And there was no mention of the U.S. that I recall. And there were European investment bank representatives there and EU representatives there that signed some sort of memorandum of understanding, shook hands, took pictures, basically saying Canada wants to do business with the EU in terms of the minerals that Canada has.
Right. And that's the obvious signing that, given what's happened with the States, that's the way that we're going to go. And again, I think it's political theater in a lot of ways. We're completely tied to our relationship with the States, like it or not. And so me personally, I would be, and I'm a libertarian, but I'd be working on that relationship with our closest neighbor, the closest neighbor we've had for a long time. And people don't necessarily like to hear that because they have problems with the people in charge. But this has nothing to do with that. This is all about what's realistically feasible. And to me, the biggest place where we should be trying to sell to is the US, and making sure that relationship is. And again, I'm libertarian, not necessarily focusing on left or right, but that's the way I see it.
So whether we agree with government funding private industry or not, you can still make money when you recognize a pattern as a speculator. So for example, in the States, when you identified, as I did last year, New York Stock Exchange or NASDAQ traded companies that are likely or being told that they're probably going to get approved for a Department of War grant. And when that happened, I can think of 3 examples, the shares just skyrocketed. So translating that back to what I'm saying, where the Canadian government is saying, we are going to help fund, we are going to help expedite permits. Does any of that political speech or stated initiative influence the way you speculate at all, 100%. Regardless of your political viewpoint?
No, 100%. It doesn't mean I would buy a bad company because of it.
It positively 100% or negatively 100%?
Oh, 100% it affects the way I place money.
Okay.
And what I'm saying is I wouldn't, if I think the company is not good and the government's going to support it, that does not mean that I would put money into it. What it means is if I'm already looking at a company, or if I already own a company, and I'll use the example because the one I'm invested in Surge Copper, and I've already said that publicly, and they've presented with me at Metals Investors Reform, so it's not out there. But when they were added to the BC Critical Minerals Office, the share price moved up significantly, and I think it should. And North Isle was added in that, and Defense Metals was added in that too. I think that specifically, it has nothing to do with BC, but I think that when they identify projects, and they're on that specific, like they're only naming 3, and they FPX, a former MSC sponsor, was named, I think, the year prior, so 2 years ago, to that Critical Minerals Office, and they were one of 2. So when it's that specific, and especially when I am already invested, or I'm looking at something, that is a reason that I would have top of my list, because if the government is fully supporting it and these guys I already know are good, that's a huge validation check mark. Because one thing as an investor in the resource sector, you're sort of always trying to discern is whether this project's actually viable. Will it be able to go through the permitting process? Does it have the economics that it's going to be able to sort of wade through the water of not necessarily needing $7 copper, or, like not needing necessarily $5,000 gold or $20 nickel to work. And so when you have these sort of validation points, you have good management that have the relationships with the First Nations, that have those different things all in a line. It's a huge validation factor for me. And so it makes me more comfortable with putting the position up closer to that sort of 10% mark. And it also gives me more credence to the theory that these things are actually going to be something in the future. And I think when you parlay that into the M&A market we're going to go into, I think at some point, both precious metals and across the base metal sector, I think things like those matter even more. Those senior mining companies want to have as many de-risking moments as possible, and it makes them more confident in that they're buying something they're going to be able to get across the line. So yeah, 100% is a big factor. It's not the factor that I would solely buy a company for. It's more that supporting point. And it wouldn't be something that I would take by a mediocre asset or something that I think is poorly managed. It would not enter my portfolio just because of it.
A discussion point that came up in a conversation was, why is day 2 of the PDAC investor exchange, where you have all these companies presented, why did it feel like it was busier, shoulder to shoulder, more packed out than day 1, which is on a Sunday, where you traditionally would get more retail going booth to booth? Was that your perception too? And do you have any insight on that?
Yeah, actually, I think after sort of experienced that, and in preparation for this show, the things that I was thinking about, it actually parlays back, I think, to what I said about Metals Investors Forum, the observation that there was a lot of outside companies that you don't normally see at the smaller conferences there, doing deals or talking about doing a deal. And so my interpretation of what we saw there is that the retail crowd, or the generalist investor, is still kind of not there. And then on the other side of things, there's a lot of deals that are happening in and amongst industry people. And so you're seeing a flood of corporates, executives down on the floor, looking for new deals, looking to place money, a variety of things. So that's why I think the second day was stronger than the Sunday. That's the only kind of thing I can come up with in my head that makes plausible sense. And I don't necessarily think it's, positive or negative. I think it's just indicative of sort of where we are. And I'll just parlay this to myself. So obviously I'm a newsletter writer. January was basically a record month in terms of number of subscriptions sold. And in looking at that, I would say that, that is kind of proof in the pudding that we're obviously in a bull market. But also when you dig one step closer, and I was just looking at how it broke down, I also saw, more of a swing towards the US investor than I did sort of anywhere else around the world from where they usually come from. And I just thought that was sort of interesting. And I'm not even really sure what that necessarily means. But when you mix that in with some of the questions that I've got, I would say there definitely is sort of a swing happening, at least in the States, where, a portion of people are coming from tech, coming from crypto, coming from maybe the general broader market, and starting to look at why gold is at $5,000 per ounce and how they can sort of take advantage of that. And that's a momentum move. And, but it's interesting, and it probably does parlay into, maybe even showing where we are as Canadians in terms of retail investors, and maybe the state of the Canadian economy, where maybe the Canadian retail investor is a little bit more downtrodden than their counterpart in the US.
So I'll share this rumor, and for listeners, you should take what I'm about to say with a grain of salt. But Brian, I had a conversation with somebody that is pretty well connected, and they told me that there was a European central banker that told them that the place to be is in Canadian small cap mining stocks. And that, according to this person that told me this, 2 people removed, I have no way to verify this, but they said it's Canadian small caps. And this person said, I put $6 million in Canadian small caps. So for whatever that's worth, don't believe it, but that's what I was told. Any reflections on that?
Yeah, I would believe it, or at least I want to believe it.
Right.
I think that the ilk of the person that you've described would certainly understand the state of the world and the state of the monetary system probably fairly well. And so to me, it seems completely realistic that they would have a pretty good view of where money needs to be pushed. And then of course we have days like the day that we're recording this, and we're seeing a correction across the market. And so, whether that's to do with war, whether that's to be, this is just another dip like after in January, time will always tell. But yeah, I tend to agree that this is the place to be moving forward, and that especially on the precious metal side, given where the economics and the financials are sort of headed, in the behavior of governments, that we should see sustained prices into the future, or sustained higher prices. And to me, I guess, and I don't know if you were part of the conversation I had at one of the dinners, but I do think that this is more likely around a floor or a base in this bull market than it is a top. So that would be my guess.
I've been wondering, though, over the last month, has investor psychology been hurt a little? Because in January, like the third and a half week into January, it was the precious metals were going up like a rocket ship. And then there was that correction. Did you feel like that has shattered or shaken some retail sentiment, though, even as you're getting new subs signing up? It seemed to me, my perception might not be fully well-rounded in that regard, but what is your take on that?
Yeah, I'm sure it is. I'm sure it is. But that has to do with, I think it has to do with a number of things. I think generally speaking, that's always the way the market is going to work. And euphoria, it can be destroyed, or doubt can creep into an investor's mind quite quickly if their baseline thesis is wishy-washy. And what I think what happens is when you have momentum investors, when you're making the decision over a weekend that you're going to take your portfolio, crypto is not going to work anymore, and then you're moving it into junior mining companies, I don't think you have the same base that you or I do, where we've been investing in this for, well over a decade, and where our basis for investing, or especially on the precious metal side, is something that's ingrained. It's something we've lived and believed in for a long time. And so, I think it's much easier for us to maintain a level head in these markets when you have ups and downs, because we've been through it before and we sort of understand what the thesis is all about. Whereas in a momentum trader, or however they're viewing it, their emotions whipsaw, back and forth. And that's really what creates opportunity for investors, again, that understand what they're investing in, understand maybe the broader view of the sector and the themes, and understand that volatility, at least in this period of time, is probably going to be the norm rather than the exception. And volatility can either be made your friend or it can be an enemy. And again, it's all about psychology. And again, if you don't have the grounding on why you're in the sector and what you're looking for in the companies you're invested in, man, you're probably going to be sent through the ringer in terms of where this thing is going to go up and down moving forward, at least for the foreseeable future that I can see. I don't see any reason why the market settles down. War in the Middle East, financial markets, crazy with the US market sort of taking a broader market step back, with, whether it's the US and Canada or the US and the state or the European Union or whatever. There's even infighting amongst allies. What a crazy time to be living. And I would say that, you need to have your head on and understand what you're investing in. That'll help you with the emotional ebbs and flows that you're going to feel. And, it's opportunity to me. That's what I see. When things sell off, I want to be a buyer.
So a quote that I got from a very high net worth, wealthy person that have been in the sector for quite a while. They said the junior mining sector is the best place to be for a rich individual to multiply wealth by buying at a cyclical bottom. And so one of my strategies for attending the conference and having some meetings in Toronto, Brian, I wanted to learn from some high net worth people via one-on-one meetings that have been in the sector a while and just kind of pick their brain as to their process, not just for stock picks for today, but I'm taking a more multi-cyclical view to where, even though this is a bull market, what can I learn about myself and about the industry and the best way to make money from smart people in this cycle, so I can utilize that to deploy capital at the bottom of the coming bottom and whatever cyclical metal we might look at. And so this person was sharing that these companies, good deposits and even good management teams, can be deprived of capital. Investor sentiment, you just mentioned some of those swings, can get so low that the valuations get so out of whack that you can deploy a significant amount of money at that time and do phenomenally well. Interesting thing is I had two people that take advantage of this that I talked to, and both of them prefer to buy in the open market. And I'm lifting that up for retail investors that say, I don't get the cheap shares. I don't get the backroom deals. I'm not in the room or close to the deals. I don't get to have the free trading shares when the $3 million promotion hits so that I could sell into that liquidity and the lift that is created thereof. Both of these gentlemen, Brian, told me that they don't play the founders' cheap share games. And oftentimes, they don't even want to be known by management. So what they utilize, and I as one of the gentlemen was telling me his process and was telling me the value of some of his positions, which were in the high seven-figure, and 8-figure range, he said, when I was clarified that was, and he didn't mind me asking, because I even said to him, I said, do you mind me asking these specific questions? Because, I had never asked him those questions before, but he didn't mind. So I clarified. And then so I kept asking questions. And then so to one of the gentlemen, I said, so your process, if I'm understanding you correctly, like 80% of your process before you deploy capital comes from I'll just say, your institutional knowledge of the sector. What by that I mean your understanding of geological trends, your understanding of who was successful, who was not successful, your understanding of who was behind the deals that succeeded, who was behind the deals that failed, good projects that were left because the cycle peaked out and nobody could raise money to further that project anymore, your understanding of different management teams and their strengths, your ability to recognize a good project that was abandoned but now is under the ownership and the leadership of a good management team at a cyclical bottom. So all of this multi-decade historical knowledge this gentleman would bring to identify value. And then I was asking questions and say, do you go to management then and talk? And an interesting strategy, even when deploying what I would consider as a large sum of money, is that he would often go to a smart person close to the story that is one step removed from the CEO. And so that is one strategy that some of these ultra high net worth people utilize to make money in this sector, because he didn't want to fund the company, but he wanted to participate a couple steps removed as what we'll term a ghost, someone that can come and go in and out of these companies without meeting that 9.9% above threshold, doesn't have to report, doesn't have management asking him for money. He stays on top of the company and its progress and can buy what he wants, can sell what he wants. So as I was reflecting on all of this, I came up with some preliminary notes and categorizations. And someone could be listening and saying, Bill, tell us a company to buy, or can you talk specifics? What we're doing here now, okay? 10 years ago, I didn't know anything of what I'm telling you. So take what we're sharing and just look at it as a skeleton, and then your experience as you start to get more into junior mining speculation, as you attend conferences, as you listen to people on the internet, such as you're listening to us, as you go to conferences and talk to executives and investors yourself. That'll be the flesh and the tendons that you put on a skeleton. So I'm throwing out an idea so you can understand a little bit of how the sausage is made behind the scenes, because you haven't been to the factory maybe, but the way how people make money and how the whole ecosystem of junior mining stocks, what I'm sharing with you is part of that. And that could help inform some of your understanding of how the sector actually works. So, Brian, I came up with 3 different categories of what I'll term junior mining ghosts. And this is subject to change, even as I come up with my own paradigms and understandings. The first one I'll call a purist, that they leave no trace. They're hands off, just like I described. They don't finance. They're a step removed from the executives, and they don't even want to be close to the executives. All right. The second one I'll call an apparitionist. An apparition, of course, is the appearance of a ghost. And so they might periodically make an appearance when a crisis necessitates. And for one of the gentlemen I talked to when I was in Toronto, that could be in the form of voicing displeasure with management, perhaps even in the form of an ultimatum that unless you turn the ship around, unless you change these things, I will be going activists on you to try to change management so that the value can be extracted from this project on behalf of all shareholders. So there's that appearance when necessary, to where things get so out of whack or moving in the direction to such a degree that I'm not happy anymore and I own a lot of this company, so I'm going to appear out of my silence and out of my leaving no trace, and I'm going to make my presence known. If things correct, maybe I'll go back into the background. And the third one, if you remember from Pinocchio, that old Disney cartoon that we watched when we were kids, at least I did, Geppetto, who made Pinocchio, and then, he had the strings of the puppet and he would basically move. So there's some ghosts, and I've met some of these. One in particular I'm thinking of that I didn't meet this time in Toronto, but I've met in the past, to where they're behind the scene pulling strings, and they actively use proxies. A lot of times these proxies will be people that will help market the stock, or they're talking to the CEO and giving direction because they've already injected capital. Perhaps they're willing to inject more capital, but they're going to do so when the strings that they want pulled are pulled. So they're actively doing things behind the scenes. So those are my 3 categories. I know I talked for a while on that, Brian. Your thoughts?
Yeah, I think it's super interesting. And like I obviously, and we've sort of touched on it in previous, but yeah, there's a number of different ways things happen in the sector. And I would say that it's probably the exact opposite how I operate or have operated. And so for me, other than information, I'm not sure how I can, use that to any advantage besides understanding if I know certain people are in positions, I know how that company is basically operating. The double ghosts are very hard. And that individual is particularly good at leaving no trace behind. And so that is what it is. And considering the integrity of who I think that is, that's usually only a plus if they're in that company. Some of the other guys, I think you want to be sort of careful, like who's pulling the strings. And again, I hate being so vague with people, but again, it's something that's learned, sort of how things work, how different groups work and interact with each other. And again, that's one of those points I think comes with experience. I think, educating that those things are there, that those people are there is very good. But I don't know if people can necessarily fully grasp that without being sort of engrossed or had enough time in the sector to sort of see it. But what do you get? Like, so you've categorized these. I think you've done a very good job at categorizing these. How are you going to use that in any way?
I am, because so for example, from, is it Geppetto or Geppetto? How do you pronounce it?
I say Geppetto, but I don't.
Geppetto.
Yeah.
Okay. So when I see a Geppetto, and then when I learn some of the proxies and I see that whole behind the scenes trying to make this to happen, if I can identify that at the beginning stages, I can likely invest and get part of that lift. Also, with some of the ghosts, you may not want to be associated with them. And you can perhaps learn of some of those conversationally by going out to dinner. As you've taught me, people drink a little too much. They let their mouth slip. They tell you about the last deal that they were in when so-and-so, did them over, told them one thing and did another, and sold out when we were supposed to finance together. And you learn all these little tidbits. And then that can help you just when you're having a conversation and you say, who are some of your key shareholders and how long have they been in the story? So there may not be like a direct action step, especially for retail investors listening to us have this conversation. But it's once you become aware of how everything actually operates, you just have a better idea of what to look out for and where you are when you're buying a share in the open market. And let me give you this example. And Brian, you know this one because I went to you when it was brought up to me. But 18 months ago, there was a junior in which the previous management team had not done that good. There was some prospectivity with the project. A new management group came in, and they were actively seeking to finance and promote the story. Now, there's three things that make a junior mining stock go up. One is macro, and that has to do with, is there risk on sentiment? What is the price of the underlying commodity? That alone can move a junior a lot. The second is marketing. When people go out and tell the story of an illiquid junior, and if they do it compellingly, that's likely going to bring in more buying. When you effectively market, that creates the perception of value, whether it's real or it's actual or perceived, one can debate, but good marketing will create a perception of value. All of that, when all that momentum builds, that can cause a share price to go up. So when this group came into this little junior, the junior's up 500% over the last 18 months. And you could look at it and you could say, did so much occur at the project level that it warrants that? No, because they financed it and they marketed it well. And that alone produced a 500% return. So when you see people like that come into the story, if you buy low, recognizing that, you can do really well. Now, one of the big names that was a catalyst, Brian, behind all of this, I could point back, and this is where this historical knowledge comes in. I'm doing this on purpose because I was around 4 or 5 years ago when the same individual was named in a presentation of a certain junior resource stock, and that stock did nothing but go down, literally from the IPO. Here's the difference. In that story, there were some promoters that gave themselves cheap shares that basically brought in that name, probably more so from a marketing standpoint. But the big name was not the driver behind that story. The difference is the story that I mentioned that's up 500%, that name is actually in control, directing the ship and making things happen versus just investing because somebody asked them to invest. So even recognizing that nuance of difference, one at the IPO did nothing but go down. This one, from the reset of the company and the marketing and the financing, has done nothing but go up in the last 18 months.
Right.
You want to say something, right?
No,
Or object to something I said.
No. No, it's just, you know what? It's quite interesting because, yeah, and you said that very well. And I think people should pay attention to what you said, because that certainly is a way to make money in this sector. I'll just tell you my perspective and my experience with sort of doing this. And I think I'm sort of giving you a play on my own psychology and whatever. But I've certainly thought the same thing. And I've seen different things going on and thought to myself, oh, you know what? This is probably a good setup, even though I don't like management. I don't like the project, don't like the company. But, you know, considering who's pulling those strings and where the marketing is going, I think I can make some money. And the problem was that, or what I've noticed about myself is that when I haven't done the work like the company and want to, and have like major conviction for it, I have no staying power when it comes to volatility in the market. And I was basically, I basically projected in myself exactly what I described earlier. But it's just my psychology is that I need to have done the work. I need to believe in the company and where it's headed to sort of believe it through the ups and downs. And I think if you're able to take, at least for me, if I was to be able to take some of these ideas or something that I see coming with a company I don't like, I better be sure I get it with the right market cycle, because there's no way I'm going to be able to wade through the ups and downs of the market, where I would much rather focus on making good picks, making like good bets in the sector and pushing those forward and moving like that. And so that's when I hear this stuff, like I love to gather more knowledge and understand more things and how they work. But for me personally, I've come to the realization that I'm certainly better when it comes to staying to the stuff I believe in and have the highest conviction for. And that's where my money should be. Even if you're talking about playing around with like small amounts of money, whatever that may be to each person, I just don't have the staying power when it comes to speculating and stuff I don't believe in. And that's just me personally. And again, there's different mindsets and psychologies of people that can make money a variety of ways. And I think that's maybe like the biggest thing, is to show that each individual, you know, everybody is so different in how they can make money. And there's a million different ways that you can make money. You don't have to do the same thing as, you know, any commentator, as Bill Powers, as Brian Leni. You don't have to do that. You probably just need to try enough things that you find what's the process that sort of fits you. And that's the best thing that you can do, because that'll give you the most conviction. That'll give you the best chance of making money to wade through the ups and downs. And that'd be my biggest thing to tell people, is that, like, you know, it's just another example of finding your own way.
So with some of this, what I just kind of threw out there for discussion's sake and for learning's sake, whenever you see some of this ghost activity, perhaps, or you recognize it in maybe a company that you invested in that you weren't aware of, have you ever sold because of something going on behind the scenes in a junior miner that you get wind of after you bought the stock?
Absolutely. And
can you share any examples, or even if you don't?
I don't know if I want to share any specific, and I feel bad for not sharing the examples. You know, but maybe next time I can think of something that I can share the full thing. But what I will say is this: is absolutely. And it's another example of that we make mistakes. You know, you think you have all the information, and then it appears that you absolutely don't. And so, yeah. And I'm very quick to, or at least I think I'm quick to admit when I'm wrong and move towards, another avenue, whether that's selling the stock or mainly reducing the position or exposure to whatever that difference, that person might be. And then sort of moving from there. And like I would say, like there's even being engrossed in this sector for as long as I have, there's just some people I haven't met yet. And there's some people that I didn't realize have as bad of a reputation as they do. And so when that comes to knowledge, it can be sort of off-putting when you put so much work into a company. You think that, you've checked every box, and then this piece of information comes for, it's like, oh, not so fast. This person's involved, and you're likely to be shortchanged in some shape or manner. The thing is, especially in this kind of market, it's unfortunate in some ways that bull markets, allow a lot of riffraff to stay in this sector. And so it's just a warning that you sort of always have to be careful, because the bull markets are fantastic, what we all wait for. But these hidden people in hidden situations, have a way of showing themselves in these kinds of markets, sort of what you were alluding to, people that.
And I should clarify too, lest I'm misunderstood. When I'm talking about these junior mining ghosts and these 3 categories that I'm kind of just trying to write down as I gather my thoughts and form a paradigm. In general, what I'm saying is amoral. In other words, I'm not saying if you're a Geppettoist and you're controlling the strings behind the scenes, I'm not saying that that's inherently amoral. It could actually be a good thing. Yeah. If you got a person. So, yeah, depending on the situation. Exactly. Yeah. So please don't misunderstand me. If you're an apparitionist and you appear every so often and you're a ghost behind the scene that makes yourself known, that could be a good thing, especially if you're a shareholder of a company that you think is off the rails and this activist steps up and says, let's get it back on the rails. Or if you're the purist ghost who just is hands off, perhaps they don't have like direct influence, but if they're in the stock, it could be a good thing. You probably don't know about it unless you talk to somebody who knows them and happens to slip and tell you about it. But generally what I'm saying is amoral. I'm just saying this is my observation, my opinion of what I've seen actually exists, for what it's worth.
Yeah. Like I'm just thinking to myself as we're talking about this, like how I can suggest people look for it or understand it. And I think it's just a matter. You just have to be going to conferences and experience, like, again, these aren't necessarily things that, I learned right away. It's stuff you learn over time. And the more you talk, the more you're engrossed in the sector. So unfortunately there isn't a direct thing I can suggest. But it is worth knowing. It is worth knowing. And I'm certainly glad that sort of learning has especially happened over the last year. Yeah.
Any thoughts you have further from reflecting on your days in Toronto, Brian?
Well, the other thing that really stood out to me is this sort of trend towards bulk sampling. I think there's a number of companies that are starting these bulk sample programs, and it makes sense in a way. And we have touched on this in a prior episode, but it just rehashed, because I knew there was a bunch, but there's even more companies that I wasn't aware that are now doing it. And one of the guys at the company, I really like the guy, but I said, okay, you're gonna make $50 million or however much money off this bulk sample. Like, what are you gonna do with it? And he said, I have no idea. I thought to myself, okay, well, that's problematic. So I think what people need to do is if these companies are doing bulk samples, or they're doing some trial mining or whatever it is, and just ask what the reasoning is and how they're going to parlay that into, future work, or, where does it fit in the vision of the company? It sort of plays back to, we're talking about Andre Gaumont, and I just interviewed him a couple of weeks ago, and it really sunk into the importance of vision from a management team, the articulation of it and sort of the living of it. So it's one thing to have a vision about how the company is going to progress, how they're going to add value, but the detail and then obviously the execution that the person is doing what they say that they're going to do is where investors, I think, need to find that alignment. And of course, Andre Gaumont is like one of the best examples because he lived it and then, had $1 billion success out of it. And there's obviously, I would say again, thinking about Pareto's rule, there's only going to be a certain segment, but this is something that investors can listen for and ask questions surrounding the vision for the company and how the company is necessarily working that out. And that's to me the perfect example of talking about these bulk samples and what they may or may not mean. There needs to be a reason why you're doing it outside of just raising the money, because you're taking away from the future value of that mine. And again, like there's companies that I know, and one in particular I'm invested in, that it makes a lot of sense why they're doing it, and I think it's going to lead to an M&A deal. But that's part and parcel of the story. So if you examined the company, you would talk to the CEO, that's where it's headed. But again, some of these other guys are just raising the money, and especially if they're on that more bad actor side of things, they're going to find ways to funnel that money to themselves, would be my guess. So you just need to ask more questions.
So is there a processing facility that they use, or like what's the strategy? Is it to show proof of concept, or is it to get cash in the door?
Well, that's the thing. That's the thing. It's like I said, what are you going to do with the money? It's the one particular conversation that I had, and you said, I have no idea what we're going to do with the money. But again, you can do that. Let's say you have, and obviously these are going to be in situations that usually aren't going to require a huge CapEx. But you've got a vein at surface that's high grade, and you can mine that and then send the ore to just about anywhere not just about anywhere, but there's some specific places right now where you could most likely sell it, China being one of them. And you could sell that, make the money, and now you're sitting on this bunch of cash. So what are you going to do with it? And again, I wouldn't necessarily say, we're going to explore, or we're going to do this, we're going to do that. Like, to me, there needs to be better reasoning on why you're doing what you're doing and exactly what that plan is for doing it. And I just thought it was an interesting trend that's going around. That's what happens when you have $5,000 gold, and a lot of these companies can get away with doing something like that. And people don't necessarily ask as many questions because it probably will work. It's just, why exactly are you doing it? So
Brian, you interviewed, I believe it was Nicole Adsheed-Bell.
Yep.
And she talked about the psychology of not just investors. This was, 6-8 months ago, whenever you interviewed her, but she talked about the psychology of executives. And the way she described it, it was actually junior high-ish, in that, why do you guys all wear the stonewashed jeans like when I was in junior high? Well, it's because Susie and Bonnie have the stonewashed jeans, and they're the cool kids, so I'm going to buy the stonewashed jeans. And she said that oftentimes you can see those trends in junior mining, to where if this company does it and another one does it, then, I'm going to do it and add that into our business plan because they're doing it as well. And that's not to belittle or make fun of anybody, but it's a psychological factor to observe what you're describing.
Absolutely. And that very likely is part of why you're seeing an uptick in these sorts of business models, or whatever you want to actually call that. There's some situations where it's completely warranted and it makes sense. And there's other situations where I can see there's no thought put into it whatsoever. And that's probably what you're describing as I'm doing it because the other guy did it and his share price went up 20 cents because of it, or 20% because of it. So might as well do it myself. So, again, I don't think it takes too many questions for you to sort of understand why any one company is doing what they're doing. And so the point is just for investors to start asking that. So that's just something that came up. And then the other thing that I was thinking about is just the sheer amount of financings that have popped up in the last 2 weeks. And the reason why I say that is because I look back on 2020 specifically, and you remember that was a really good 6 to 8 months run we had. And the companies have this innate ability, whether it's conscious or unconscious, to sort of start raising money en masse. And it's sort of probably like the same thing where they see another company do it, so I'm going to do it too. And of course, right after that, that Q4 of 2020, things started to take a break. And I don't know. It just popped into my head that maybe that's sort of what we're seeing in the market here, kind of hitting a culmination of number and probably overall size of the amount of money being raised. But again, we'll see. Like everything else about the market tells me that this is far from over. But maybe 2026 is going to be a little bit harder across the board than many would have guessed, especially back in January when things were rocking and rolling.
A lot of times with the financing too, like when you see who's leading the financing, does that affect you, Brian? When you see the investment bank that is doing the financing, like how does that factor into your analysis? It
can, but honestly, I'm a pretty independent thinker, and so not that it can't be a validation factor after the fact, but I'm buying stuff because I believe in it. And that's 100%. If I believe in it, I don't much really care who the lead order is or that sort of thing, or it wouldn't sway me, but yeah, it would maybe validate it, like, that makes me feel even better about the direction of the company if these guys are investing in it. But then again, like it's a pretty small window where that applies for me specifically. And so, it's a minor point because I'm making the decisions based on the fundamentals of the company. And that's what's done me well and will do me well into the future. Like I said, it's more one of those, just like food for thought. I was on the train on the way home last night. I was sitting there, I was kind of going through the news flow. And I just thought, wow, like this is the amount of $10 million financings that I've seen over the last 2 weeks is incredible. And like there was some near like 100 billion, and these things are fully spoken for within a day, or maybe even going into the financing, they're announcing it's already gone. So that's a pretty frothy market, and that's not necessarily a bad thing. But if it parlays into other things I've seen, it just makes me think, we'll see how the rest of the year goes. I hope people are invested in their junior mining portfolio for very specific reasons and very specific catalysts that are outside gold continuing to go to $7,000. And this might be, again, one of those moments that reinforces like an adage it's basically an adage that I have for myself, is that I don't buy junior mining companies because I think the metal price is going up. Metal price is only one reason why you can make or lose money in a junior mining company, especially on the downside. There's so many ways that junior mining companies can lose you money. And so you be very sure on the reasons of why you've invested. And then that makes the ups and downs either buying opportunities or opportunities to sell.
And when you see your companies that you bought at a bottom because you did a fundamental analysis going up, when you assess why that company is going up, though, in your head, do you say, I attribute this from copper going from $4.50 to $6? Do you quantify the impact of the rising commodity on the share price that you own?
Yeah, most of the time. Well, I usually have a spreadsheet on the companies that have resources or technical study. I have a spreadsheet for all of them, and I can punch the metal price in, and I can see what the value should be according to me. And so I can attribute that. And sometimes it's really easy to do it. You can see, copper goes from $5 to $6, and the share price gaps up by 30% or 40%, whatever it is. And I think it's pretty, like, if there's no other news released, it's pretty obvious that was probably why, or if the whole sector moved, it's probably why. But then you get into these bull market moves, let's say January, where you have every day the stock's going up 5%, 6%, 3%, and it's just steady. It's harder to sort of over enough time, if you've got that parabolic move, to say, oh, it's because of this or it's because of that. So it becomes a little bit harder to assign. And what I would say is, like, another thing that a mentor taught me early on is if you're seeing movement in share price in a company and you can't sort of put any logic to it, it's probably time to take a little bit off the table, because likely that share price is going to come back, and then you just recoup that differential. Meaning, if it's a 10-cent stock and it moves to 12 cents on no news, no metal price, no nothing, it just popped, probably just grab a little bit of that, sell a portion of your position. Likely that thing comes back, and then you just buy it again. And so you recoup that differential. And that's something that you can do, or they taught me to do. in regular life, in regular markets. And in bear markets especially, it's very prudent to do that sort of thing. In bull markets, I see, sentiment is high. People are only seeing roses ahead. And so, maybe it's less of an important thing to do, but just something to contemplate in your process.
Well, thank you for another month of listenership. Brian and I appreciate it. If you want to learn more about Brian's newsletter, go to juniorstockreview.com. We appreciate your listenership, and we'll catch you for our monthly chat in about 30 days. Thanks for the conversation, Brian.
That's great.